So good morning, everyone. Today we have come out with the market outlook for the month of September, and we have observed that markets had moved up in the last 1 or 2 months, but before that, in the month of June, there was a correction also. Nifty had corrected from 23,000 to 21,000, and the important point here is that when it corrected, the month of June became positive from the money flow perspective from FIIs. That means FIIs are not leaving India completely. They are buying the market whenever they are finding it attractive. So 21,000, which was the 5-year average valuation, that is where we saw the money coming in from the FIIs. Because if you look at the financial year 25 EPS, average EPS around 1140 rupees, then 21,000 was coming around 18 times market, and the 5-year average was 18.5x. So that means the Nifty came little lower than 5-year average, and we saw the market found the FI money coming in at those levels, and then the Nifty recovered. So now what is more interesting to be noted here is that the sectors which were performing before budget, we have seen that they have gone into some time correction, and the new sectors are emerging which have not participated in the last 2-3 years. So we will talk about that also in this particular presentation. So first of all, let's start with the Indian macros, how they are panning out, what exactly looking positive in the Indian macros at the current moment. So if you see the fiscal deficit, this has been talk of the town that despite government spending money on the capital expenditure, the fiscal deficit is not increasing, right? And rather in this budget, which was fiscal deficit, which was expected to be 5.1% of GDP, it rather declined to 4.9%, and it was lower than 5.6% of last year. So all credit goes to the government on such a fiscal prudence. Another thing was, if you look at the government borrowing, it is not increasing actually. Subsidies have come down from 1.9% of GDP to almost 1.2% of GDP in the last 2 years. And this has resulted in subdued bond yields. Subdued bond yields are very important actually for the equity markets also, because that defines your cost of capital. And if it remains lower, it is good from the returns perspective. Rupee, when we compare with the emerging markets and over a time frame of 2 years, it has outperformed actually. It has remained around 83 levels, but emerging market currencies have depreciated by 6-9%, 6 to 9%. Forex reserves in India have recovered. If you remember, it had declined to almost 500 plus kind of levels, $500 billion. But now it has recovered back to $674 billion. So this is something very significant, considering the fact that the neighboring countries around India are not in a very good shape. They have lost their forex reserves, and that's why India is coming out with a very, very sweet spot when we compare, something around scenario. The capex intensity is maintained by the Indian government around 11.1 lakh crores, which is almost 3.4% of GDP. This is very encouraging that the government is still holding this. Now, one can say that this 11.1 lakh crore is not a very high percentage when compared with the last year. That is bound to happen because the base is increasing, but the quantum remains high. 11.1 lakh crore consistently. Even if this amount is being spent, it is definitely good for the economy. If you look at the government focus on manufacturing, it is showing results because Apple has started talking about that the new series, iPhone 16 Pro will be manufactured possibly in India. Mostly it was assembly which used to happen in India. We have to see how does it happen now. If the actual manufacturing starts happening, it will be a big positive for India going forward. Current GDP is around 323 lakh crores. And in 5 years, it can be near 550 lakh crores. Now, if you see the interest rate, the bond yields in India is around 6.8%, but the debt to GDP is 57%. Now, if this comes down because GDP is increasing and the debt is not increasing, that means we are going to save If it comes down to 50% from 57%, 4 to 5 lakh crore of savings, interest rate savings India will have. So that will define the credit rating upgrade, and then the lower interest rate scenario is also likely to prevail in that scenario. So I think this is definitely coming positive for us. And we are already working in terms of alternatives to crude oil. Crude oil, we were almost, maximum part we were importing in India, more than 85%. But now we are coming out with a lot of alternatives. You have seen government is talking about 20% ethanol blending by 2025, sustainable aviation fuel, where 5% blending is going to be going forward. We have talking about EV as a segment. We are talking about hybrid as a segment, etc., etc. Right? Green hydrogen and then all these things. So this is definitely an alternative space which is being created, and that is where our when the GDP size, will increase and the import bill also is not inflating, the requirement for debt also will decrease. And that is where this interest rate saving can go further. So India is definitely in a good condition where the re-rating is possible. Passenger traffic, has increased to almost 376 million at the airports across India. And this number we saw in financial year 24. And out of this, 69.6 million passengers were international passengers. So that means 37 crore almost passengers were there, and out of which almost 7 crores were the international passengers. This year's passenger traffic has surpassed the previous record, which we saw in 2019, because for the last few years, our numbers were lower than 2019, but now it has surpassed, and it is 15% higher than the last year of 2023. So that shows the domestic tourism impact in the Indian markets. People have started moving out. It is going to help the airlines. It is going to help the hotels. It is going to help many other segments now, because this is a discretionary expenditure through the travel which is going to come out. Medical tourism, international passengers. This is another booming theme now going forward for India from that perspective. So if you see now, another important thing is power. Now, power requirement in India is continuously increasing. The manufacturing push by the government, the rural areas where 95% of the villages now are covered with electricity, we feel that the electricity demand is continuously increasing now. Last year it was 221 gigawatt if you look at the peak power demand, but this year it has crossed to 50 gigawatt. There is an expectation it will cross 400 gigawatts by 2030, and that's why there is an immediate requirement for power. The government is working on renewable energy, but renewable energy is running at maximum capacity utilization of 25% currently. And that's why the plant load factor, which is higher in thermal plants, thermal capex requirement is increased. And this clearly is seen here. If you look at the plant load factor, which is nothing but the plant capacity utilization, it has increased to 77% in 24 financial year. And this is where whatever power requirement is there on immediate basis, it is going to be majorly fulfilled through the thermal power. So you need more thermal power, and that can be done through the more capex. So far, this capex was not there from 2015-16 till 2022. We did not see any major capex, but now it is happening with 20% CAGR. So the companies related to this segment also are going to perform on a long-term basis. I think 7-8 year canvas is very clear. You can look at another growing segment is the wire and cables. In the consumer durable segment, wire and cables has been something which is used in factories, which is used in houses also. When the new buildings are coming up, you need wire and cables. New factories coming up, you need wire and cables. And that's why if you compare with the real GDP growth of India, right, sort of 6% it was there before. Now, and then we saw the demand of wire and cables rising to 9.1%. So which was almost 1.6x before till financial year 24. But going forward, if the real GDP remains around 7%, the wire and cable demand is going to be around 15%. So it will be more than double than the GDP growth, real GDP growth of India. This is definitely one of the positive for this particular sector. And also along with this, we feel that this segment is around $8 billion segment. 40% value it derives from the electrification market, and it is going to be worth $20 billion in financial year 30. And another thing is that the market share of the top companies. So precisely if you look at 5 companies in this segment, their market share is going to increase. So Polycab has 23% market share. KEI Industries has 10% market share. RR Cable has 9% market share. Havels has 9% market share, and then Finolex. So barring Polycab, all these companies, they have close to 9-10% market share. And that is where we have to be very understand the fact that how their balance sheets have been and work accordingly on the investment perspective. So we like this particular sector, and we feel that the market share of the top companies is likely to increase. In fact, if you look at in the organized share, in the organized, because this was also one of the unorganized market before, you can see here in financial year 14, the organized market was hardly 57%. That means the unorganized market was very high. It was almost 43%. But now the organized market has increased to 85% and the unorganized is hardly 15%. So that means in the organized market, the top players are going to gain market share. And that is where from Polycab till Havels and Finolex, you will see the growth coming up actually in those categories more. So if you look at from the industry growth perspective, which players are growing faster, right? So if the industry is 9%, we have seen these players from APAR. So you can see that from the small cap to mid cap segment, the growth has been much faster. So these companies have grown very sharply. And the data is something which will help you to understand and drive the dynamics from the market share increase and also from the volume increase on a particular base. So on that particular base, so far we saw that there was a good surge happening in these companies and their participation also was seen in the stock market. Going ahead, if suppose in these segments like Havels, Finolex, if we start seeing a good growth happening, I think there also there is a room for growth. Now, coming out from the wire and cable space, if you look at from India weight perspective in MSCI, because this is a very important indicator from the flows perspective. The global flows are muted right now, but we have seen that whenever it is going to happen, it is going to happen big time for India. Because India weight just 3 years before was 10% in MSCI, but now it has increased to almost 19%. And China has lost almost 9% weight. So that means China weight has been shifted to India because of this underperformance in Chinese market and outperformance in Indian markets. And this is where if going forward, whenever flows are going to come, India also will be a key beneficiary of that flows. And the large cap space also in India is going to participate, which will drive Nifty also going forward. So this is where India is placed among the emerging markets, which is very, very heartening. And I think this is a big trigger for the flows to come in going forward. Not only the weight in the index, but also the number of constituents actually have increased significantly. If you see in 2014, we had 64 components, but now we have more than double, 131. That means Indian markets are broadening. More companies actually are coming out and getting listed. So the breadth of the market is increasing. And this is where our contribution to the MSCI is increasing in terms of number of members. So this is a trend which has continuously picking up. And we feel the way new IPOs are coming, the way government is coming out with new reforms, The sectors or stocks which were not participating in the last 10-15 years, they are coming out because there is a strong tailwind to those sectors. There is a large possibility that the market will keep on broadening and more constituents of MSCI index will be seen from the Indian markets. Now, from the IPO perspective, you can see that this number in 2023 has reached to one of the highest so far. And this is the total number of IPOs in India. It has reached to 241 in 2023. 2024, already we have started companies coming in, and it is likely to increase further. So not only secondary market, primary market also is buzzing. We have seen certain companies, they have got very good premium actually on listing. And that is where this is a good segment right now for the public to raise money, for the companies to raise money. And we need to be, yes, watchful of the fact of the valuations of the companies. At times, the valuation will be higher. The people can get stuck up at on the day of listing. So you need to be careful, read the things. But the trend is very clear that more companies are coming up now for IPO in Indian markets. Now, as I was discussing with you, that there are certain sectors which were not participating in the last 2-3 years. For example, technology, for example, rural related stocks, for example, consumer discretionary as a space, staples as a space, textiles and sugar. All of these sectors actually have started performing now. Now, when I talk about technology, this was a space, which was lagged behind and since 2022 because the interest rate started moving higher. So it led to the derating of the technology companies. But now we feel that when the interest rates are getting topped out in US, the interest rate cut will lead to the rise in this particular sector. And that's why technology is coming up. The last quarter volumes were relatively better actually in few large caps. And that has given some confidence actually that going forward, the numbers can be better than what the market is expecting. Another thing I would like to highlight here is that there was a talk of some recession in US, but we should also understand that this recessionary talks were there since 2021 because that time we saw the 2-year and 10-year bond yield spread became negative the first time. That means the bond market took the recessionary scenario in the price that time itself. And that is where the equity markets in US had declined for 2 years. When we were around 18,000, 19,000, US equity markets had declined to the pre-pandemic level. S&P had that level of 3,500. It declined, it tested those levels, and then it started recovering up. So when it declined, it took into its price this recessionary talks. So again, if we are talking about this, I don't think it is going to happen because, and that is where the technology as a space, which is more dependent on the mortgage book, they have a more exposure on the BFSI space in US. Our sense is that they can start performing now after having so much of consolidation. Rural related segment, because we were not giving too much impetus on the rural because the recovery was not coming. Then some FMCG companies like HUL also, they came out and said that the demand perspective is improving, it is getting bottomed out. And then the inflation levels also started lowering down. And then we have seen the state elections coming up where a lot of money was given actually to students, to the farmers, to the girls. And that is where we feel that the consumer as a space, the rural related stocks, they have a room now to play for the coming 5-6 months. And that's why we have also tilted our portfolio more in the favor of consumer, some technology stocks, and the other segments also. So this is where even the consumer discretionary has been the beneficiary of this. So our per capita income, which used to be $2,500, now it has increased to $2,700. It is increasing with the GDP also. But we feel that we are still much lower than the China, which is at $13,000 per capita. If you look at the other economies, they are much higher than India. So India is definitely has a lot of space to recover from the per capita perspective. So these segments can perform going forward whenever you see that some kind of money is being given out, the job creation possibly is started happening in certain segments. All of this is likely to lead to a surge in these areas. Staples also belong to this. In fact, I give you one example of Colgate. In the staple segment, Colgate became part of our portfolio around 1800 levels because we realized, in fact, we like this scenario that whenever the market share of the companies is falling, there is always a bottom of it. And the Colgate, we saw that when the market share declined from 65% to almost 50%, it was continuously underperforming. But when it declined to 50%, we did not see the impact of Patanjali Dantkanti too much actually. It actually deteriorated over the period. And then there was a time when Colgate started increasing its market share. So we felt that that was a time to buy the stock. We bought at 1800. It has got doubled. So in a staple space also, we saw that the stock got doubled because of such a scenario. Now this thing is working out in Voltas in the consumer discretionary space because the Voltas market share was 24.5% and it declined to 18.5%. And then there is a scenario coming up that possibly the bottom is made for that market share decline, and that's why the stock is recovering. Textiles as a space is another interesting one because there is a scenario where when we used to talk about China plus one, now we are talking about Bangladesh plus one also, because the problems in Bangladesh can have led to a lot of volatility in that area. Their forex reserves have declined. There was a power problem. So there was a scenario that the order book position of European markets can move towards Indian markets also. And but the problem was that the raw material cotton generally we used to take from Bangladesh. So that's why the companies had participated initially, but again they are consolidating more. I think going forward, whenever the market share increase, something is going to come out. UK FTA agreement also will lead to this particular move. In that case, textile as a space can start performing again. Sugar, we had seen that the government had put a ban actually on the sugarcane juice just before elections to use for ethanol so that the sugar prices can be controlled when the government was moving towards elections. But we have seen now that most of the situation is cooling off, and the government target of 20% blending by 2025, and only 1.5 years is left now. I think it is going to increase and increase. And that is where these companies and related stocks and ethanol are also going to perform going forward. So in our Ace Equity, this is our flagship product in our equity space, ISEC Ace Equity PMS. There we have added few stocks. Like in the mid cap space, we have added Praj Industries and Viatech Vavag. So Praj Industries, as I was discussing just now about the sugar companies, the ethanol blending and the related stocks, Praj Industries has their technology through which it can work upon the ethanol plants. So 1G ethanol or 2G ethanol. So in the 1G, we take feedstock as sugarcane juice. In 2G, we take feedstock something else like maybe grains or rice or maybe corn, etc., etc. So this company has technology to convert these feedstocks into finally into ethanol. So this is definitely a very encouraging space. Not only in India, this company has started getting orders from overseas, even US, even Australia. And not only ethanol, they are also moving into compressed biogas technology. So as you all know, there was a dire need even in the northern part of India. A lot of pollution was coming when there was a harvesting. And but now there is some technology that the residue can be used in as a raw material for gas. So government is giving good subsidy actually on the compressed biogas plants now, and this company has a technology for that. They are generally working on a good number of projects now. Blue hydrogen, green hydrogen, those are the other technologies. So recently Praj Industries has received order actually for blue hydrogen also from overseas. Blue hydrogen is something where it is not like green hydrogen where you do electrolysis and the hydrogen is coming out and there is no carbon dioxide. In blue hydrogen you do get carbon dioxide, but it is getting absorbed, so it is not going away into the environment. That is the beauty, and those projects are coming out and this company is executing. So the order book position is likely to grow and there is a good growth expected. Viatech Vavag, this is into the water treatment, sewage water, recycling, even in the desalination. 47%, 45% of their revenues are coming from overseas markets like Middle East, like Dubai and Saudi Arabia. But Dubai, already desalination plants were there. We felt that the demand is going to come from Saudi Arabia because Saudi Arabia is getting more liberal, more orders can come because expats are coming into that country, more water requirement, more desalination, and they have an expertise in that direction. Chennai based company it is. Mr. Mittal is leading the company and he has good stake around 18% something. But the point is that he has lot of expertise about this company actually, about the water treatment. So we had an expectation that orders from Saudi Arabia is going to increase. Not only that, in Indian markets also, Chennai is the only city which has started desalination. 2010, they had set up the desalination plant, but now they are coming out with a 4x increase in the plant size, and that's a very encouraging news. So the order book has reached to 11,500 crores. The margin was 8%, which has increased to 13.5%. And there is going to be sustainability of margins going forward, which can lead to the higher profitability. And the order book also from the current 11,500 crores is likely to reach to 16,000 crore by financial year 25 ending. So that is where good growth prospects from here. And in fact, I just add on one more thing. In any economy, whenever the water availability comes below 1700 cubic meter per capita, there is generally a water stress situation. In our country, it has reached to 1350 cubic meter per capita. So there is a dire need for the government to work on the water infrastructure. The temperatures before the rainy season had reached very high in the northern part of India. And there is a water scarcity we saw in certain regions like Bangalore, and also certain reforms from the government like semiconductor and green hydrogen. They need pure water. So the need for water actually has increased like anything. Pure water has increased like anything. And that is where we feel such kind of companies are going to gain. In the large cap space, IT and pharma, we believe they can be good bets going forward because technology was not performing before, but the last quarter results were, we feel the bottom was made. And it looks like that the companies which are not only in IT services, but also in ER&D and the products and services are going to gain. So SCL Tech is one which is there in all these segments. And in the AI space also, it is working very fast. Along with this, we have seen that in the ER&D space, now you look at what's happening, because in the automobile space, when we provide softwares, previously only 10% softwares were used in the automobiles. Now 26% softwares are used in automobiles, and going forward it will be 58% also. So that means there is more demand for these companies, their market share increase, their revenue increasing. And that's why we feel that along with the auto cycle also these segments can grow. So not only IT services, which is more dependent on BFSI, I think the companies which are expanding into other areas, they are going to gain. Coming to Lupin, good cash generation and moderate valuations, and we feel that going forward there is a good growth. But from the macro perspective, there is a drug shortage in US. I think that is something which can lead to growth in these companies. There was a shortage of 300 drugs in the month of December 2023. Then it came to 325. I will not be surprised if it crosses 350 also going forward. So that's why pharma, which was performing before also, it is not that pharma has been continuously and it was performing. But certain stocks like Lupin and all, which remain laggard, they are coming out, and I think there is a good move which can come in these kind of stocks, which where the cash flow situation has actually come better. So that's all from our side actually. In today's webinar, we will come again, with our market outlook, and we will give you a lot of practicality also what we are doing in our portfolios, because that will give you an insight how you need to position your own portfolios also. So that's all from our side. Thank you very much.
Investment in securities market are subject to market risk. Read all the related documents carefully before investing.